my name is VyNghiem and this is my presentations about the impacts of US government's interventions and global occurrences on the US stock markets. It is a personal interest of mine to learn and analyze the stock market, so I choose this topic for my final presentations. By definitions, a bear market happens when the stock market experiences the price declines about 19 to 22%. If the price only decline about 10 to 19, we would label it as corrections. Some factor of a bear market or corrections would be weak economy, pandemics, wars, geopolitical crises, drastic economic conversions, or government interventions. I take my data from Nasdaq.com, an official site that not only ensures credibility for historical stock price data, but also allow me to download spreadsheets of 10 years worth of data. For the purpose of this project, I use 6-month historical data, and this is the link for the spreadsheets that I download. These datasets contain information about daily opening, closing price, highest, lowest price, then the volumes, which is the number of transactions of the stock. The tool that I picked for this presentation is the Tableau, and the main type of chart used is the line chart incorporated with area charts because this is most suitable to emphasize the trend and development over continuous time. Another type of graph used in these visualizations would be the bar charts. It is good for comparing size to it reflects the differences in daily trading volumes of the two ETFs. Here we have the thresholds and a date slider and a linear log switcher for the viewer to easily focus on any part they want. They can go in a further date or they can go in a closer date. The red area here marked by my few calculations represent the downtrend of the stock price. We can see a correction happen on SPY as its price decline less than 18%. For here, if we put it to about 13%, the red area disappear because it is less than 13%. The highest price is 477, the lowest price is about 416, that is less than 20% also. However, on QQQ charts, it seems to be more impact as it already went into the bear markets. The highest price is 403, while the lowest is just about 318, which is definitely more than 20% declines in price. And we can see the threshold also show that it is more than 18%. In both the previous and these charts, I have marked certain major events happens from the beginning of 2022. They can be considered as the factor of stock correction of bear market. As we discussed earlier, we have the US government intervention, FOMC that adjusting the tax rate, the news of wars between Russia and Ukraine, and economic sanctions against Russia. This event can be categorized into two types, the overnight news or the expected news when we already know it will happen. When we look at the trading volumes in orange, which means the total number of transactions happens both sell and buy together with the price actions in blue here, we can see that the volume is irregularly high on or right before or right after the day of an event. That means the market is extremely volatile because of those events. For here, we know the FOMC gonna happen on 2024, and in anticipate to that event, the market has fallen. And here also on March 16, that's the second FOMC, and the market hit the bottom right before the event, but then it go back up after the event. For example, the Ukraine-Russia wars is all happened on February 24. The market also falls before that. So by looking at this graph, we'll be able to see how those events happens that make the markets shake the markets and make it go volatile. they either sell a lot or buy a lot of stock.